Where we have seen a bit of a choppiness. It is a news-driven week, last week and this one as well. We did see the Asian market start on a higher note. We did see crude prices at around 1-week highs and copper prices at around 3-week highs. But at this point in time, after Europe has opened and you have seen those Italy and Spain yields go up so much higher, there is that profit-taking seeping in. And ditto has been the case, of course, with the precious metal prices. No safe haven buying, but you won't see too much of a declines coming in as well. And that's ahead of the FOMC meeting this weekend itself. Let's get an idea on how do you trade all of those commodities then. Let's go across to Kishore Narne. He's Senior VP, Anand Rathi Commodities, and he joins us on the show right here. Kishore, hi, welcome to the show. Let's start with gold first. And while we did get into the week on the higher side, the kind of Greek election outcome that has come has put in some pressure on the prices.
Yes, I think as the market expectations on probably of the risk aversion will give that gold direction at this point of time. But I think this will be a very short-term impact. But as we go ahead, I think I put more weightage on FOMC rather than even the Greece election. So I think going towards Wednesday, probably as the FOMC will come out with its policy, I think if there is any clear indication or a hint of a QE3 which is coming up maybe in the next couple of months, then the gold will start moving up and it will break that 1635 kind of a mark, where after that it might test 1670 kind of levels. But if the Fed continues to maintain its tone of a slight hawkishness in its statements, probably then the markets will be seeing a sell-off which could even break down the 1580 kind of levels on the lower side.
So at this point in time, how would you want to go ahead? Would you rather leave your positions open?
I think I still bet that we have some more time before the QE3, so probably this meeting I'm not expecting any clear indication of QE3, so probably markets would be disappointed. So I would be selling on rallies towards around 30,100 kind of levels with a stop loss of 3250, and then look for targets close to 29,700, 750 kind of levels. But again, it's a very short term, and I am betting on this with a very good stop loss of 30,250, which is a previous high. So on a breakout, obviously we'll be looking at 31,000 kind of levels. So I am taking a chance of going short at this point of time, just on the expectation that at this point of time FOMC will be trying to avoid QE3.
Okay, but how are you reading the international market sentiment? Because if you look at that, the buy options for July and November are most active, and that's $2,200 an ounce. Yeah,
I think overall speculative interest or the investor interest has risen in the last couple of weeks, especially both on the CFTC front we are seeing some interest, and then even the ETFs have actually, the holdings on ETFs have increased over the last 2 weeks, especially before the election, the last couple of days before the Greece election. So I think there is a little bit of nervousness across the market, so there is some money pumped into gold. But I think as this expectations of Q3 fades, probably the market will come down again.
Kishore, how about the crude prices? Because on one side, the support seemed to be coming in from the Saudi Arabia leadership, uncertainty there, and the Greek elections outcome as well. But that doesn't really seem to be holding right now.
Yeah, I think Saudi Arabia, I think anyway, as usual, they came up with a good successor. Again, the succession process will be on, so there's no big deal in Saudi uncertainty at this point of time. But I think the kind of production or output which is coming in crude would be significantly pressurizing the prices. It will be putting a roof at around $87 for WTI and probably $100 on Brent. But again, here what I'm saying is if there is no QE3, probably then all this steam will go off from all the commodities, including base metals and crude.
Much, of course, depends upon the FOMC meeting, which is happening this weekend. But ahead of that, how would you look at the base metal prices, Kishore? Because apart from the Greek election and FOMC, because that, of course, is on everybody's mind, how do you look at the Chinese statements coming in that the growth could be bottoming out this quarter, the next quarter could see a rebound? I mean, all of those statements, do you think are helping?
No, I think it's pretty difficult to believe Chinese statements at this point of time, because they need to actually act on the stimulus front. At this point of time, I think as their economists have been pointing out, probably it is not pretty good time for coming with a stimulus. So probably they will try to boost morale and give some kind of a positive sentiments into the markets. But I think until unless the growth really revives, probably the market will be skeptical on the numbers. But again, on the base metal front, if we see the overall picture, the last week we have seen a good gains and some strength coming up in copper as well. So probably the price should extend towards around 422, 423 kind of levels, where I would go short on metal with a stop loss of 431 and look for targets close to 410 on Indian markets.